question, Jinesh, is not that. My question to you, Jinesh, is very simple, which is that why is India underperforming at a time when on the medical front our success is greater, on the oil front there is good news. With these two factors at play, we should be the talk of the town or toast of the global markets.
Sure. First of all, guys, hope you all are fine and stay safe wherever you are. I know it's an unprecedented crisis. Nobody knew this is coming, and clearly last 50 days have been very difficult for the economy. So, Nikunj, to answer your question, clearly, unless and until we get signs of economic opening up, the signs of stimulus packages, how they are coming from the government to support certain sections of the sectors, I think it would be difficult to estimate what will be the knock on the economy. We already know whatever number a few of the experts says that we have already 270 to 280 billion dollars a knock we have taken in the GDP, and still we are trying to open up the economy after 50 days of lockdown. Despite, as you rightly said, that we have the best, I would say in a way that we have been able to manage the casualty rates much better in terms of percentages as compared to rest of the world. So clearly, I think participants, investors are waiting for economic relaxation to happen, to understand how the consumer behavior changes, how the economic activity comes back to normalcy, along with the stimulus package. So clearly, this $280 billion hit, someone has to take a brunt of it. And as of now, because the stimulus packages has not come out, there is sort of a confusion and sort of negativity that what will happen to some of the sectors if they are not able to given some packages, or if they take time to come out of it. So clearly, the longer the lockdown now would lead to more economic impact, and it will take more time for economy to revive. So I think if you really take China, Taiwan, South Korea, some of the Asian economies who have come out of the lockdown, economy has started 60-70% and things are coming back to normalcy. Hopefully, if there is no second wave, clearly money will move that side than coming to India. And also we have a situation of how much stimulus package to give, whether we will go for a downgrade in terms of rating, what will be the impact to the currency. So I think there are too many question marks as of now. Once we hear something on the stimulus package, I'm not saying that is the only way to revive economy, but I'm saying that is sort of a catalyst to start work done. As you are seeing, lockdown relaxation are happening, but people will get clear picture only after 1 or 2 months in terms of how the economy will revive, and whether it is a 9-12 month journey or it is a 6-month journey. So I think till that time we will be under a sort of a volatile phase of the market, a confusion phase of the market in terms of how things will pan out.
Jinesh, the portfolio which you've run for the longest time is perhaps all weaved around quality stocks. I can argue about expensive. I can argue that you don't have real deep value, high dividend yielding stocks, and that portfolio, despite rich valuations, has worked, whether it's a DMart or an HDFC Bank. What happens now to this kind of a portfolio positioning when we know that demand will contract on the retail front and on the consumer front, and that could have impact on a franchise like HDFC Bank because of retail exposure? That could have impact on DMart purely because of the footfalls will come down. Do you think it still makes sense to run such a concentrated quality stroke consumer driven portfolio?
See, quality, we can argue both sides what defines quality, but clearly if you see last 11 years what we have done, I think that has helped us out. So I think if you are with the strong management, if you are with the strong balance sheets, clearly they will survive for next 6 months, and there is a right to win for them for next 2 to 3 years. Obviously, companies will have to change some of their business models. Companies will have to adapt technologies very fast if they are not adopting, and they will have to find out ways and means to prosper again. But clearly, I think that depends on how strong is the management, what is the capability of their balance sheets, and that is where we are putting our money. Our theme has been, from the portfolio perspective, is to be with managements who understands this cycles well, who are able to navigate this phase well, who are able to survive for next 6 months, given strong balance sheets and the business model, and have right to win for next 2 to 3 years. Obviously, some of the leverage plays, including financials, will take time to come out of this. Whereas some of the other plays, if I don't know how the economy will revive, but at least I can say that they will be in a position to do better as compared to their peers and still report decent numbers as compared to their peers. So I think the game is the better you identify the business models, the better you identify the managements, the stronger the management ability of them to survive and come out of this crisis in a much better shape.
Jinesh, we've been tracking, of course, the impact on particular segments of the market, post-COVID. Let's talk about the financials, of course, because that remains to be the key area of focus. What's your view in terms of how one should really approach some of these names right now? We started to get filtering in of some of those key numbers. No one's going to be entirely immune, but would you still be looking at the preferred handful of names in the private sector, perhaps looking otherwise at a leader like an SBI in the post-COVID scenario? What's really your rationale?
I think clearly financials, as I said, it's a leverage name, will take a beating for some time. Because clearly they are backbone to the economy, and economy has come to halt. And obviously, as I said, this 270 to 280 billion dollars of GDP knock, someone will have to pay price to it, and hence asset quality issues will come in some of the banks. And you are right that nobody is going to be saved in this. Someone will have lesser hit as compared to others. Suffice to say that, as I again say, some of the managements who understands the liquidity position well, capital adequacy well, is able to raise capital at its will, and is able to manage the asset quality better, they will come out of this crisis in maybe like 6 to 9 months time. Being a leverage play, obviously we need to be careful, because you don't know how the hits will come, how the asset quality will behave for a shorter period of time. So financial as a sector has been darling for the market for last 10 years. Obviously now with this COVID situation and economy coming to grinding halt, obviously it will have to face the music of asset quality issues. And in that also you will have some winners. But I would say as of now, it is better to be slightly underweight in the sector in the overall scheme of things, and evaluate as and when you get clarity on the economic revival.
What about some of the other pockets that have emerged? For instance, pharma, and we've been tracking some of the trends there, clearly taking some leadership in the market. Is that a segment also that you're looking at? Is that something you're finding attractive?
So I think everything is relative in that sense. So if you really take the situation as of now, unless and until the medicine or the vaccine comes out, clearly some of the defensive, so-called defensive, as well as strong balance sheet sectors will do well, be it consumer staples or technology or healthcare for that matter, as of now. So clearly, pharma as a sector has not done well for last 6-7 years, and with this COVID thing, clearly healthcare as a piece is getting importance. And obviously, there are some of the good companies who have already been doing well in last many years, and will get further uptick in terms of improving their businesses. Everything is a relative game. They might also face some revenue slowdown or lesser revenue growth, but at least if you are better off than the other place, it is best sector as of now along with consumer staples and technology piece.
All right, fair enough. Talking about consumption, then let's just take some of those pockets further. There's of course your core consumption, and then there's also discretionary, and everyone's of course been picking up on the fact that Hero talked about sales already coming in. Is that likely to be a more short-term scenario because people want to have their own mode of transport, or do you actually see a recovery that's much stronger once the lockdown lifts?
So I think this health crisis has really changed the way the consumers will behave once economy opens up. And in that, what we are seeing in some parts of the other economy is that safety and security has become very important. And in that matter, if someone was traveling by public transport, or someone was using the cab aggregators, clearly they would start thinking of buying at least one vehicle, be it two-wheeler or four-wheeler, to ensure the safety of the family. So clearly, I think the new normal will set in. The demand will be there. If you really take China and some of the numbers, what we see, though it is more on the luxury segment, but clearly the car sales have just gone off the roof. The critical for India would be to see how the used car markets behave once the economy opens up. And if that is going to sell like a hot cake, then clearly the demand for the new two-wheelers or the four-wheelers will also be very, very strong. There could be pent-up buying. There could be revenge shopping, what some people are talking about. So all this will play out, and also we should not forget this will all depend how the job losses scenario emerge, or how people are able to get back to work and all sorts of things. But suffice to say, what we see in the other parts of the world, something similar can repeat even in India. Maybe not to that scale, but at least much better than what we are now.
Sure. But Jinesh, aren't you worried about premium valuations within the FMCG space? You just highlighted earlier about consumption as a pocket. We've been staring at what Unilever is sitting on, or for that matter, Nestle even today ahead of its numbers is doing. And that really seems to be the concerns because, while they are basic essentials and you can't live without them, lockdown or not, but they too will see some ease off in demand coming in. And, maybe a change in strategy is what they will also have to compel to undertake in the post-COVID world.
So I think the problem in India is that if you take some of the parameters of corporate governance, strong business models, scalable business models, then there are very few companies to really play in India where you want to park your money or put your money in a big way. Clearly, one of the name which you alluded to had a big share sale, and you would have seen the demand what it had. Both from the global investors as well as domestic investors. So clearly, it's a relative game. As of now, the idea is to create a 35 stock, 40 stock portfolio, which will survive this difficult phase of this economy well. And as and when the economy starts reviving, obviously some shifts will happen to some of the other names which are battered down and are seeing revival in their business models. See, we need to understand that the new normal will be different. We don't know how different it could be. See, if there is a medicine or vaccine very, very fast, then I think things will change significantly. But if this continues and medicine and vaccine takes much longer time, then clearly things will be looking more weaker, and hence some of this defensive plays will continue to be ruling the market for a longer period of time. So clearly, I would say wait for 2-3 months. You will get a better clarity on the economy, how it is opening up. whether there is a second wave, third wave of infection across the world, and or not. Even in India, we have to be careful once we open up the economy, how the infection rates flattens out. So clearly, there are too many variables at play. Nobody knows how things will pan out. Nobody have seen this type of crisis, and hence I think it is better to play safe, play cautious rather than going all out on one go.
Okay. All right, Jinesh.